Hi there. Welcome to the Futuristic Africa Talk, conversations that will shape the future of Africa. I am your host, God's Willie Wanafo. Today we have two important guests in our midst, Ekos Akpokabayen and Anthony Anakwue, the co-founders of Ovid Capita, and they'll be tackling the topic, private equity in Africa, trends and opportunities. Let's get into it, ladies and gentlemen. I'm very excited.
The Futuristic Africa Talk. Brought to you by Ovid Capita. Conversations that will shape the future of Africa.
The African consumer is not who we're being told they are. They're complex, they're multidimensional, they're dynamic.
So people look around the world and they say, where is it that we have a consumer base of that sort of size, a young consumer base that's also ready?
I think there's a wide acknowledgement that Africa is rising. I think we're the optimistic first of the earth, really, because at the same time,
Africa doesn't need aid, but Africa needs a lot of inflow of capital from other areas of the world.
Better Africa means better global.
Àdúgbò alárugẹ ká tún ṣe tó máa dàbí ibi tí àwọn ibi wá ń gba ìsinmi tí àwọn ibi ń pè ní tourism.
Investor, there remains an observation that the perceived risks of investing in Africa is much higher than the actual risk.
It is my hope that our aspiration will come to fruition.
Hi, welcome everyone to the third episode of the Futurist Africa Talk. It's your host again, God's Willie Wanafo, and I'm here with my brother, my co-partner, Eric Esiri. Today we have two beautiful guests for you. The Chief Investment Officer of Ovid Capital, Ekos Akpokabayen, and the CEO of Ovid Capital, Anthony Anakwue, to tackle the topic African private equity trends and opportunities. So let me quickly just introduce our guest today. So Anthony has a BS in engineering from the Brunel University. He has over 15 years in private equity, has consulted globally, has invested in different private equity deals globally, in real estate, technology, fintech. Ekos has over 50 years of transaction know-how. He has worked in Africa, founded numerous businesses, and authored 2 books. With that said, let me just quickly pass the mic to my co-host, say a few words, then we can kick off. Eric?
Greetings from that part of the world, Africa precisely. I want to say a very big welcome to our amazing guests in the house, Mr. Anthony and Mr. Ekos. We're very privileged to have both of you on this podcast, sirs. Thank you very much for making our time.
Thank you, Godswill. Thank you, Eric.
Thank you, Godswill. Thank you, Eric.
All right, sirs. Welcome. I'm very excited about today because I get to have the two of you together, my two role models in one place, and I get to take your praise. The first thing is talking about private equity in Africa, sirs. Africa makes less than 1% of the global private equity. That's according to the Africa Private Equity and Venture Capital Association. We are I think we're even actually at 0.6% of the global private equity activities. Why is that the case? If we may start there.
Is Ekos gonna take that, or are we gonna take turns?
Anyone can take it.
Yeah, so if I don't know if I got the question, very well. So are you saying why is it that we have only 1% investment in Africa, or out of all the private equity investments, or what is the question exactly?
Yes, that's actually the question. Africa accounts for 16.7% of the world's global population. Why is that accounts for 0.6% of the global private equity deals in the world? It's 54 countries together.
Okay. Well, I think from my perspective, one simple thing will be that the private equity is not yet fully developed in Africa. And that's because of the investment landscape, and a lot of people actually perceive Africa as a high risk area to do business, and also so a lot of large private equity firms, a couple of them have tried to invest in Africa, and recently they've not succeeded. Some of them have pulled out, even though they're trying to come back now because they're seeing the things that are happening in Africa. So, for me, it's simple. I mean, landscape is not there. The structure for, private equity to thrive is not there. It's a unique market, so it needs unique things, or a unique way to look at it, to get it. But the way that most, established investors are looking now, it's a high risk place. So you would expect that not a lot of people will be investing as much as other parts of the world. Ekos, what do you think?
Yes, look, I'll come in there a little bit to give you some perspective. Sometimes when the statistics are spoken about, it sort of come in a way like we're far behind us negative, and I don't think so. I think when you look at the history, I mean, in most countries in Africa, they're celebrating 60 years of independence. I just met not long ago the first Nigerian female professor. In your lifetime, you can see the first person that just drove a car was just a few years ago. The first person who went to school in your family. So we're quite a young plugging into the global system, and we have to look at it in that perspective. I think it's time now. Even the world financial system has been developing. When you study it, how many years it's developed, and it's coming this way. And in most economies in the continent, we're even possibly considering getting political stability first of all. And once you get that going properly, which we're just getting in the continent, and then we plug into the financial system properly in a different level. And one of the things that keep financial systems to grow and to be very effective is what we call financial engineering, which private equity stands in that. And you cannot talk about that without having other components. When you look at, I remember just 2 days ago, I was listening to Obama's speech again when he was in Kenya. And he said, when he looks at the democracy in Kenya and compares that to the US, you can't compare a country that had the 44th president at the time to a country that he sat with the president, and his father was just the first president. So they had 3 or 4 presidents. So what I'm trying to say in essence is that this history, and this is a normal scenario, and that's where we at. And so we shouldn't feel with those statistics. I think for what we are doing now, it was set to happen within our generation, and we need to add into that quarter to even make what is called asset management, private equity, being known to people of our populace, how we see riches and wealth. I remember we were giving lectures to people, riches and wealth are different things, and creating wealth for different generations. I mean, we've not really had that in the current context of how we are trying to plug in from our ancient ways in Africa to the current way, plugging into the global economy. I think that's where we stand there, and that's why we're seeing those kind of figures. Less than 1%, which for me, I think there's been a lot of stride. And if you look generally, you will see countries like South Africa, which has had a lot of freedom in terms of European influence in the continent and awareness in the financial system. There's more of that than when you go to more sub-Saharan countries. And you will see more in Northern African countries participating more in private equity deals, understanding the flow of money. And one thing I want to say, not to drag this question long, is that we are aligned, and Africans are beginning to understand that you have an economy your larger economy, what you own, your land, your resources, your manpower, and all of that. And then you also have the financial economy, that's the flow of money. What enables you to transact, what enables you to secure your future, how you keep assets and money and liquid and all of that. So that development and that reality is what you're seeing that figure. But I expect that to jump tremendously in the next decade.
All right, thank you, sir. Eric?
Just to add to that, because you know, a lot of stuff has been said, but when Ekos talks about, you know, South Africa, North Africa, I mean, these are obviously areas that have developed, let's say, infrastructure for, as he said, for private equity to thrive, right? And you have to ask yourself the question, why has the rest of sub-Saharan Africa not been able to develop as in line with South Africa? So I personally think that that is based on not the fact that people are not aware of what it needs to be done, because there's a financial sector, there's banking, there's most of the other things that everybody has in all these areas. Personally, I believe that the matrices for having private equity investments in such markets that are not developed, you know, have to be different from, you know, what we do on in South Africa or North Africa. So they are unique markets and they have to be tackled as they are, because in one sense, I can say they're developed up to a certain extent, right? Because they have a lot of infrastructure already, right? But when you look at it in terms of South Africa, then you'll be making a big mistake. If you look at it in terms of North Africa, you'll be making another big mistake. And especially if you look at it in terms of other developed markets, you'll be making a big mistake. So we have to look at it based on its own merits and how, why, you know, investors or investments are not going into those markets. It's really the big sense because it's portrayed as a high-risk area, you see? So that's just my take.
Okay, thank you very much, Mr. Anthony. Now, my next question comes, but before I ask my question, I just want to know that as many who will be watching this podcast is powered by Ovid Capita. So I just want the people to know that this podcast is powered by Ovid Capita. So Ovid Capita is a private equity firm that invests in high-end companies in Africa and other parts of the world. Mr. Anthony and Mr. Ekos. Now, but this question is for Mr. Ekos. Now, what is private equity? Yes, that is my question. But before you answer that, you know, we see lots of African startups, you know, companies raising funds from non-private entities, right? Now, let's say, for example, the Africa Development Bank, where I know they have billions of dollars committed to private equity firms. Now, also we have the Fin Fund. So why is this case? Why is the case? Why do we have lots of African startups raising funds from non-private entities? Mr. Ekos, please.
Thank you, Eric. You know, first speaking about private equity, I like to help, you know, as much lay people as possible, because this term sometimes get given many names and it get complex or sounds complicated. In Africa, very common. There's what we call people put money together every month. Everybody puts their salary into a pool, and this month is given to one person, and then the next month everybody puts the salary into a pool, is given to the next person. You know, this has been very successful. And in fact, the government in South Africa has looked into it, how this can be expanded and can go big. You know, it's been very successful. But in African setting, we have done this in small. When a car buys something and you're not able to save, so you contribute into a scheme. Private equity is almost similar to these kind of things. But because of regulation, the way it's set up, it thinks a little bit bigger and long term. So not every month. Basically, you get a pool of people, which we call investors. They could be individual and they could be companies. They put a lot of money together through a company, through a fund. And that fund usually is a couple of millions averagely. And they will pull that money together and go out and buy companies. And those companies will become assets to that fund. So they expect to look for nice companies. They expect to do very well and to grow. And most companies traditionally, especially companies that are growing, they always need injection of money, either to expand or to grow. So in most companies, once you buy shares or you buy those companies, you expect the fund of the private equity, the value of the money you use to buy will increase, certain X amount. And you expect that within 5 years or 10 years fund, when you begin to sell, you will be selling for that X amount and you would have grown. And then you can start another fund. So what that does in an economy, actually is to challenge those companies to grow. Because when companies are comfortable and no one is bringing investment, no one is eyeing them from outside, it's always difficult for that economy and that company to grow to another level. So usually individuals are not able to do it, the risk is not shared enough. But when we come together as a fund, we'll be able to go into an economy and do that. And what happens with the fund and the company is always good for the economy. So the more you have that kind of scenario, the more that economies and companies grow and succeed and have the kind of money to expand and continue to grow. You always need money. And that's why in my first question, I spoke about the money economy. So it's a different science, it's a different engineering, and it's something that continues to be explored to utilize and explore the resources and the growth of human beings for a better future. And now coming to your second question.
Yes.
Yes. Now it's also tied, it's basically tied to our exposure, to our knowledge, to our growth. I think sometimes when I look at I think it's not fair if me and you, we have to run a marathon and you start 1 hour before me, or you start 2 hours before me. It's very likely that you'll finish before I finish. And sometimes,
of course,
when you look at these questions, I think they're mostly biased because when you look at other part of the continent, we are a continent that was, we got our freedom late than most other parts in the world. We are colonized. And unfortunately for ourselves, we have a lot of influence. When you look at other parts of the world, the kind of foreign influence is not as much as we see. We've been split up into 54 countries. And I think that becomes, while it's a strength, it's also very complicated. And there's influence from the Spanish, from the Portuguese, from the English, from the French, from the Germans, and in modern times now from the Chinese and the Russians. So that's why, in Ovid Capita, what we're doing, because we understand the history and we understand how this affects some of our decisions. And we know, and I've said it before, that we're not here to save the whole of Africa. We're here to save as much as we can. And it's to put the knowledge out there and to give our best and to give our shot and see how far it takes us in terms of our company, our goals, and liberating a a large portion of people in our continent and growing a large portion of companies in which we invest in.
Thank you, Mr.
Let me come in as well. I like everything Ekos said, but it might also sound very complicated as well to some minds. And obviously, we want to be very, very simple in the futuristic Africa talk. And from my own perspective, I just want to keep it as simple as possible. You know, if we're going to be doing business, or if we believe that business is going to help us succeed, as he said, the simple form is putting money together. So I'll give another take on what Ekos said. You know, I used to hear stories back in the day of people, a whole community investing in one person to go and study abroad, maybe in the US to become a doctor or whatever. And the whole community puts money together and invest in that one person, you know? And some of these one persons have gone on to become massive and made huge change in their community after they've used the community's funds to expand their knowledge and expand their capacity as human beings. So really, this is just what private equity is. And, you know, as we are in Ovid Capita, we see that there's a huge opportunity in Africa for us to tap into all the opportunity that exists, which a lot of people do not see, but we see. And I think most average Africans know that these opportunities exist. But coming back to what Ekos said about, you know, starting a marathon late, I think a lot of people believe that they're not able to start as fast as somebody in another part of the planet, right? Because those people already have those kind of access to funds. But in essence, you know, everything starts small, and from small beginnings come great things, right? So there's in my view, there's a huge potential, and we always talk about potential on the planet, on the continent. There's a huge potential in Africa for us to do a lot of business. And the reality is that we have not tapped into that. We have not tapped into that in the terms that we have not been able to pull funds together at any specific time to do any great things, right? And we have looked to other people to put funds together to do those things for us, right? And we have not done it. So this, for me, I feel that that's a very, very simple fact. And we need to start doing it, because this is what makes business thrive, and this is what is going to cause development on the continent.
Okay, thank you, Mr. Anthony. But before I call on Godswear to say what he has to say, there's still this thing that bothers me. I might have asked it some time ago, but I think I'll need more clarification on that. Now, the target is for Africa, and like Mr. Ekos rightly said, we're not trying to save Africa, right? So we're just trying to reach as much people as we can. So that is the idea. Now, there are so many persons right now, because Mr. Anthony also mentioned that a lot of people, they know what investment is, but now who is able to carry this message to them? Because so many of them, they are not, should I say, they are not tech savvy, okay? They know, they don't know, or they know little or nothing about these things. So how is Ovid Capita going to bridge that divide so that even the man in the rural community can be part of this system and benefit from it? So how is Ovid Capita going to bridge that divide? Mr. Anthony, please.
Okay, I'm still going to, you know, agree on what Ekos said. We're not here to, you know, save everybody. And we're also not here to, change the way people. Obviously, we want to change people. We want to have an effect of educating people. But the reality is that what we're here to do really is to build businesses that are going to have significant impact on the continent, right? Some of these businesses already exist. What we're just doing is taking them to the next level. Okay, so just as a community will identify potential in one of their very intelligent sons, and the whole community gathers money together to get that person to go and further or to become the best he can. So is Ovid Capita picking out the best in Africa that we, based on our own criteria, and then we're going to invest, and we know that our goals is to get these companies to become leaders on the continent and global leaders in future. Now, coming back to your point as to how we're going to educate the common man, I mean, we're doing all we can. The main aspect of how we can bring people in is because we actually look at the real situation on the ground, where the real investors are. So this is why when we look at those percentages that you guys spoke about at the beginning, it means nothing to us because, we are looking at the real numbers on the ground, who are the real investors. And when we look at that, it actually has a different outlook as to, the normal statistics that we see. So that's why we base all our stuff on real figures and real actions, right? Let me give you an example of what I mean. I was reading a story about a lady. She sells used clothing, right? And she operates between, I think, the border of South Sudan and Uganda, somewhere about that. And she sells all this clothing. And she's just one person, right? Yeah. And in total, when the math was done with her, she's a businesswoman. She has suppliers, she has investment, she has all those. But when you look at her whole business is, the whole supply chain and everything is worth, $300,000 to $400,000, yeah, in total, if you look at the whole thing, right? But that is not for $300,000 to $400,000 per annum, right? Now that whole chain of activity is not recognized in any other formal setting, right? So that's informal, and that's just a small bit. And we know that there are way bigger opportunities and bigger businesses that are going on that are bigger than her, that are out there that are not recognized. So when you look at that, it now means that in terms of investment, there's now a huge pool of investment that is literally nobody actually knows exists. Well, people see it, but they don't, because statistics do not say that they exist, then we don't see that they exist. So, I mean, those are the kind of areas that we're looking at. Those are the kind of people that we're looking to, attract or bring into, take advantage of their value, right? And, help them to get to the next, next level. So when you say we are, how do we can't reach everybody, but we want to reach the best and make the best better, right? And having done that, we know that the effects of our work will trickle down to the rest of the people.
Thank you very much, sir, for that.
All right, thank you so much.
Let me, before Goswe come in, let me just cap that up, let me just cap it up. You see, I see some smiles going on, but it's good. You see, just like Anthony said, our work will obviously trickle down. There are two main components when you look at the work we're trying to do. One is on the investor side, and the two is to the investee, where we're going to invest these funds. And so we have to look for the investors, and reaching out to the investors, they'll begin to know our work and the type of investors. Our focus mainly is on the ordinary Africans. So we're speaking to them, which we're doing on a daily basis through word of mouth, through adverts, through the internet, social media. We continue to do that. And the same thing, we have a lot of companies we have picked that we are going to invest in. And for us, I think sometimes the most important thing is those companies succeeding in an economy. And when we speak about Africa and the success we want to achieve, it may not be one-to-one to people. It may be the amount of resources we've put together and the investment we're doing with same African people's money or money we've gotten from elsewhere. And also the companies we are making to succeed, to advise them and to make sure they get to that level. Then we know that it's going to create jobs. We know it's going to help, youth and employment, empower women and children and all of these things. I mean, that's just more of in terms of the effects it's going to make. But in terms of reaching out, sometimes what Anthony said, and that's what I agree, is that sometimes you can't beat yourself too much, that you must go to everybody's door and knock, because this is not a campaign or an election, this is a business. And one of the stories that came to mind and how much these things can go, and I used to remind people that using one of the most popular things like the Bible, the Quran, these books were not written till years and years later. It was through words of mouth, and that's how huge and how important those things are. And I remember when we had the opportunity and Nelson Mandela was speaking, and Nelson Mandela saw Lionel Richie, and he ran and grabbed him. And the man was surprised. How? Where do you know me from? And he said, don't you know your song, All Night Long? This was one of the things that kept me in prison going on. And this is very powerful. And I've been looking for how to tell you thank you. I'm not Lionel Richie, but in our short time, I've experienced this a lot. And that's why every opportunity we keep giving a message. What I'm trying to say is that Lionel Richie never knew that his song was going to help an African in prison to give him strength to spend 27 years one day. He was busy singing his song to make some money or to express his art at the time, but it went far and made it rich. So I'm saying is that all the things we're doing here, we know how far it's going to go beyond our time, how far it's going to make it rich. And we've seen it. And we're not going to wait to allow people come out to embrace us like Mandela and Lionel Richie. We know it's doing its work. And that's why every day when we wake up, we pick up the phone, we send an email, we keep doing the work we're doing with our entire team.
All right, thank you so much, gentlemen. So Anthony, you said something earlier that I really like to tackle a bit. The only way to grow business properly or to grow economy properly is to private equity. Which makes me think about the different type of financing in Africa. Right. So what's really the role of private equity in Africa? We are looking at it from a perspective of a foreign direct investment. So Ekos can also already touch on this as well. What's the role of private equity compared to other FDIs? How did it do? What does it do? How does it improve life better than the other FDIs? Why is the best way to finance business? Let us know that.
I would say that I'm more biased towards private equity, because private equity is not only about financing or money, which is a big part, but the whole ecosystem or the whole objective of private equity is to make assets successful so that everybody can be profitable. And in that sense, it means bringing value in terms of expertise, in terms of management team that are able to scale businesses, right? So I'll tell you, for us in Ovid Capita, we work, the way we do it is we build a team first, right? We get the expertise, so which means we are the value, right? We say, okay, yeah, we understand the African market, we understand what works in the African market, we understand how to invest and how to grow, and we know where to find the opportunities, and we have the contacts, right? So that comes first. And then we go and say, look, we go to investors and say, this is all the value that we can bring, and these are the companies that we want to invest in, the opportunities we want to invest in. This is what is going to happen when we do it. This is how diligent we are. If you give us your money, then we can achieve this, right? And then our expertise and the investors' money mix together to go into the business. Now, when we go into the business or we buy a business or we invest in it, we're also going to make sure that that business succeeds. So we have the expertise in that area to make sure that the business is able to expand, able to go further. So in that sense, when you look at it, private equity is, for me, is what has been driving the world, right? Because in business, the start of business is always one man or one woman with an idea, and then starting the idea or building the business and receiving investment, maybe from family, friends, whatever, or from their own personal investment and building it. But mostly, it's always an idea, and for ideas to thrive, there has to be expertise and money, right? And that's what Ovid Capita brings to the table. Sorry, this is what private equity brings to the table in terms of value, right? So on the continent, I think there will be a great service done to growing economic growth if we think more in terms of private equity, invest in local businesses that are going to service, the demands that Africans have, because the market is very huge. As we know, there's almost 1.3 billion people in Africa. That's a very huge market. There are more rich people, or people are getting richer. Economic conditions are changing, and there's a huge demand for goods and services, and we need to build the companies that are going to meet this demand. And in doing so, we'll create opportunity, we'll create employment, we'll create better life for people that are working. And when you talk about FDIs, what do you call them? Those governmental organizations that, what do you call them again?
Foreign direct investment.
FDIs, yes. And those, they call those overseas investment from America. I don't know, the one from the UK and all these places. They have criteria. I mean, the kind of business that we want to invest in, they're not going to invest in. So you look at it, they're all competing for already established opportunities on the continent, right? And those opportunities are scarce. They're competing for it with banks, large banks, other countries, they're all competing for those ones. So, and those businesses are already existing. Okay, so we are talking about looking at the opportunity that they don't see, and not even that they don't see, they probably see it, but it is not in their scope at the moment, right? So when you think of that, in a sense, or in relation to Ovid Capita and what we're doing and the opportunity that we see, those kind of organizations are not ready to invest right now in these kind of opportunities. So this is where you have people like us. We know that when we get these opportunities to the stage that they can invest, then they will come in. So, but if we keep looking at them and saying, oh, this, they're doing investment in this investment, they invest all day long, but I don't think many people feel those effects of those investments because they're really already invested in things that exist. I mean, if you come and you invest in MTN, so how much effect are you having on the continent in terms of making a difference? If you come and you invest in a stock market in Zimbabwe, how much are you affecting the African continent, or making an impact? So we are talking about opportunities that exist which everybody is ignoring, and that's where our goal and our aspirations lie.
All right, so Ekos, do you have anything to say?
Yeah, I try to be quick so I don't repeat and contradict. But the last thing he said was talking about MTN and stock market. There's something called in banking. If you listen to Lagarde was saying this around the world and how this can affect the world economic system, it was too big to fail. And we've experienced it. Many of us who have run small businesses and medium businesses, there are companies that are too big to fail. And what happened is that because they also plugged into the financial system, some of the bad decisions and lose a lot of money, and they always get bailed out from government. And essentially, when government bails you out, or the world bails you out, is actually the people's money. But what is happening, what I want to differentiate in terms of FDI and private equity, and why private equity, I think, in my opinion, is one of the best things, is that when you look at the financial system, and when we talk about financial system, the financial system is the backbone of the world economy. And when it collapses, people will be hungry, people will go on strike. But you'll find out that the resources in the world is still there. The gold is still there, everything is still there. But when the financial system collapses, people are out of job and are hungry. So you see that it's very important to protect that. That is like the health of the world economic system, is the financial system, and it has its own metrics. It has its own system that we have to protect continuously. And then when you look at how the history of this financial system, when you look at it, is very interesting, and I've given a few lectures on that to people. So human beings started early by trade by barter. So you have onions, I want oranges, I give you orange, I take it. And after a while, we start to use cowries, the shack of teeth, and we start to exchange. And that was the early form of money. And then we from shack of teeth, it wasn't, we were killing all the shacks, and people decided to use precious metal. And then we started using gold, and gold became, and the precious metal became the main thing. And it was too heavy to carry around and to do business. And so human beings went and kept it in the bank and printed a note and wrote a note, and that's the form of money. And every money was backed with, I don't want to go into that, but I want to use that to explain what I want to say. Every money was backed with gold and precious metal sitting in the bank. And of course, you know what happened, and the Americans removed that. And money is now backed by the future prospect of paying back. And that created its own problem, which we'll go through maybe in another discussion. But when you look at money and what money means, and then people, and that's what we call financial engineering, it allowed people to do more trade and to become prosperous, and to begin to think how to move money and give loans. And basically that's what banks do. Banks take pool of money from everybody and keep it safe. And they know you cannot need all your money at once. And they take your money and give it to the next company, and the company succeeds, and they have to pay back over time. And the money is not really there, but it helps progress. It helps the economy. And when you look at that on financial engineering, how banks work, and you look at how public funds work to protect the financial system, because this money belongs to the public and everybody can go in there. There's a level of risk, and due to regulation, there's a level in which those funds and the kind of assets they can invest in. And that's the limitation the CEO was talking about, Anthony is talking about. Yes, In private equity, you can take more calculated risk and you can go in and score. And that's why you will see, even from time of COVID or recession, private equity have always performed more than every other funds in the market. And yes, you can look at hedge funds, but hedge funds is solely just to go and get money. It doesn't care whether it's helping the economy, it doesn't care whether it's building a company. And the next thing you look at is private equity, which allows the fund controller and managers of the fund to look at the economy and take certain calculated risk. And over time, they've always done well, naturally done well. When you look at public funds, infrastructure funds or FDIs and pension funds and all these kind of funds that have to invest with a certain regulation to protect risk, the scope and the appetite is always very limited. And we found out, and this is where the conversation is very important. And we found that because there's not enough of this kind of fund in the continent, only coming recently. And that's why in one of my talk, I spoke about the Mozambique sovereign fund and what it's going to do, and it's going to give access to some pension fund, and that's wonderful. If most of the pension funds in the world, the biggest one is the Japanese pension funds and the European funds and all these funds, and their mandate is not to come and develop your country. That's not their mandate. Their mandate is just to make sure they grow their funds so that if their people get old, there will be enough money to pay them. Their mandate is not to come and develop. And that's why it's important that we create our own kinds of fund, especially private equity, that removes all the bureaucracy and allows us the freedom to invest in those companies that will be the mega companies of the future of this continent.
Yeah, and then I definitely agree with what you're saying, Ekos, and it just makes what I was saying sound way better and more understandable. but just to finalize your point is that those mega people that you're talking about, like the bigger funds and sovereign funds and all that, they're also looking around the world every day for things with value to invest in. And obviously where what you're talking about is private equity can build those value that they would invest in. So, I mean, when you start having companies or businesses, opportunities that have been taken to a certain level, then, I mean, people in Africa, you wouldn't be asking the question, oh, how many, we need foreign direct investment, because people will see the value. I mean, no one is going to come to your continent and build value. We know what is there, so we build it, and then everybody will come down and invest. I mean, let's take a look at English football, like Premier League football. You know, started in England, and everybody around the world now wants to be part of it or invest in it. It didn't just start like that. Some people came together and built it, and they always constantly look at, you know, how can we improve? How can we create more value? How can we make this more exciting? And these are the things that we need to be doing. And this is what Ekos was saying, that private equity helps to do for, you know, the kind of opportunities that, you know, not a lot of people look at. Eric, you were
just to be very quick, since we're talking about private equity and Ovid Capita being being what it stands for, I for one would say I'm very, very excited about that. Now, due to the low growth and over-financing in developed markets like the New York Stock Exchange and the Asian market, much money have been moving into Africa. But during the pandemic, if you would agree with me, that external funds started looking in-house into their own economy, which is partially the reason we moved to Ovid Capita, right? Now, kindly bear your thoughts on what that is, the Ovid Capita token. Mr. Anthony, please.
Yeah, I mean, I know this, you know, the question says, or your statement before the question is saying that people are now looking in-house to invest in their regions rather than outwards. I still have confidence that you know, people follow opportunity, right? So if there's opportunity and there's value in Africa, people will follow it. I was reading something earlier today, you know, just a few minutes before we came on here, and I don't know if you've heard of Carlyle. Carlyle is one of the biggest Carlyle Group is one of the biggest private equity companies in the world, right? And they had set up an Africa fund, and they had to leave. And they converted the fund into this, they changed the structure of the fund changed, and Carlyle itself left. But the founder, the CEO of Carlyle, is now coming back into the continent with his own money. So no more a fund. He's coming into with his own funds, right, to invest. And what he's saying is that he doesn't even want a lot of people to know that he's doing that, because everybody will start coming. Because at the moment, there's not a lot of opportunity, competition on the continent. And he's very confident that, this is going to pay off, right? Now, when you read about his story and his history, these are the people, the pioneers that actually started the term private equity. Okay, they are one of the first private equity companies in the world, right? The term that we know today, private equity, stems from people like him, right? Now, I'm not saying that he's right or he's wrong, but from our own perspective, we already knew this all along, that it's there, right? So when you're now talking about looking inward, we also were looking inward, because we know that all the resources needed to grow exist on the continent, right? Not only to talk about, pension funds and other institutional investors that exist on the continent who do not actually invest on the continent. Those ones exist. Then there are also individual, high net worth individuals, high net worth investors that, exist on the continent that have enough resources that we don't even have to, for the kind of business we're doing, we don't really have to look outside for investment, right? So this is where we saw an opportunity where we could have the Ovid token, because we saw the dynamics of the market, how it operates, and we thought, okay, how can we build a fund that will not only will have enough structure, or the structure to tap into that local investor base that exists on the continent, that will help us, achieve our goals. So this is why we decided to go with the token, and the token has quite a lot of benefits that would be advantageous in Africa. And the reason why, that's one of the reasons why we took that route. Now, I don't know if we want to start going into those benefits, but I feel like we need a specific show for that, a specific podcast, so that we can dive deep into the benefits, so that we can have examples and all those kind of stuff. But this technology is a game changer for the African continent. Tokenization, it's a game changer. It will help us to be able to attract investors that have not been able to, invest in this kind of opportunities. And it will help us to keep investments secure, and transparent. So that's why we're going through that route. And we believe that, it will also work for investors on the continent. Ekos, do you have any thoughts on that?
I think you've said it almost all. Yeah, I think you've said it all. I would just be repeating what you've said, but you've dived into it very well, and thank you for that. But
yeah,
I would just add, based on the security token, the STO that we did, and I just want to highlight clearly one of the conversations we had years ago, and to use the opportunity when COVID hit, people at home, and the blockchain technology is there, and how to enhance that technology to the advantage of the people on the continent. And one of the things we saw was that in private equity, especially in the West, and I'm talking about the UK and the US and other places, the average threshold to participate is very high. Most Africans, and when the CEO was saying, I'll just put a value to it. You're looking at this to participate, a high net worth individual, and most funds, you need minimum of $100,000 to participate. Some can try to go as low as 50,000, but very rare. Some funds, you need $1 million, as the company to go in. And so what it means is that a lot of the big companies in the world are putting this money, and they get it. That's why they say the rich get richer. And the intention is to develop their own regions. And you will hardly get a private equity fund to raise this kind of money. And even if you do, you will end up raising from the same people who have the same money, who will still get the same returns. So it's the same people that will stay rich. And so there was something called the disruptors from 2019, 2018, 19, and blockchain is one of that, where people are coming to think that this world belongs to all of us. I mean, the status quo cannot be the same, and we need to break it from different levels to give opportunity to different kinds of people. The only kind of rich family should not stay rich forever till the world ends, right? And so this kind of thinking was coming, and we started thinking about blockchain. How can we reach investors? And when we're talking about investors, the ordinary people, it's the people who have small money, who will not be able to afford this kind of thing. And that's where the security token came in, that we can use the security token, and one has the ability to buy some token with just a couple $100 and to be able to participate in that kind of investment and get returns in years to come for themselves, for their family, and to plug in. Because what I'll tell you one thing before, I don't want to stretch on this. I'll tell you one thing. I grew up in an economy that there were no loans. There was no much interest rate. We felt interest rate did not mean anything. People bought houses in cash. People went to farm, save for years, and they built their houses in cash, and they bought their cars in cash. And I later moved to an economy whereby everyone was taking out loans. Everyone was taking out credit cards and all of this. And I wasn't used to it. And we used to be proud that, we were not plugged into that economy. We paid for everything we owned, and which it was good. But many years ago, I sat down and I studied, and I realized the effect of all the people taking out loans and all the people taking out credit affects me. And I also contribute to pay for that, but I don't participate. So what I'm trying to say is that you pay for the credit people take around the world or around an economy, and you pay for it without participating to that benefit. So the success private equity is having, people like you are paying for it, but you never participate in it. And that's why many people in the continent keep getting poor, and they don't know why. Because you don't care. And the prices of petrol will go up, and fuel will go up, and food will go up, and you don't know why. You're plugged into the economy. And so sometimes and somehow your money needs to be in all this kind of instrument, private equity or stocks and all of this. And one of the best, obviously, is the private equity. Because in private equity, we have different types of investment. We're going to invest your money, different type of investment. So be it equity, stocks, and all of this. And so you can go to bed knowing your money is working for you. And most Africans don't have their money working for them. So we're just piling poverty year in and year out. And that's one of our message. And that's one of the things the token is going to do to help more Africans to participate, because they don't have the kind of money to participate in the first place.
Okay, just to wrap things quickly on my end, I'm so glad, Mr. Ekos, you mentioned about Africans being poor and some part of the West actually being rich. And I am so glad that I think we have one of the topics lined up in our subsequent podcast, that will be for some time again. Now, just to wrap things, gentlemen, Mr. Anthony and Mr. Ekos, both of you have successfully exited multiple investments in Africa and other parts of the world. Now, but this is one of the major barriers to entry for investors into the African market, especially given the lack of competitive financial markets. Now, this is my question. How does one successfully exit investments in Africa? Mr. Ekos, then Mr. Anthony, you will bear your thoughts on that too.
Should I go, or Ekos, you wanna? Let me just start, because there are so many reports about people not being able to exist on our own part, in terms of. Okay, Eric, I think that's a very good question, because private equity is all about, exiting at the end of the day and everybody realizing their returns. So in our own sense, yes, a lot of the different ways where companies or private equity companies exit businesses, some are through management buyouts, others are through IPOs, taking companies public and stuff like that, right? In our own sense, we know that we're investing in areas where a lot of people are not seeing the value. So that's why we are committed, and we're building a team that is going to ensure, right, that those businesses that we are building will become valuable. So remember I said before, when you have value, people are going to come for it. I know that all these, huge, large investors, they're already competing for opportunities in Africa. It's not a case of, oh, there's no investment in Africa. The valuable investments, there's a large competition for it, and there are only a few of them. So what we're saying is, we're going to put enough effort in to make sure that all those opportunities that we are investing in are going to be valuable. And when you have a valuable prospect, then having an exit is not going to be an issue, because for us, we're looking more on management buyouts. We're looking on buyouts, selling these companies if possible, or IPOs and stuff like that. So for me, I feel that if you're confident enough to get the company to a valuable state, or your opportunity to a valuable state, I don't see how there's going to be a barrier. I mean, if you know what the barrier is to exiting opportunities on the continent in terms of, what I'm talking about, which is having a valuable opportunity that can be bought out, then you can let me know if you have that data of how it's difficult to, not get rid of, or take your exit an opportunity that has, the kind of characteristics I have said now, and the kind of value that we are about to create. I don't see that there's a difficulty in doing that.
Mr. Ekos, your thoughts, sir?
Okay, yes. Look, Eric, I think I understand, a little bit of the sentiment there. And this is always why I'm always very careful. Because sometimes I was telling people sometimes we misplace when we talk about Africa, because this is 54 countries, quite huge. It's 1.3 billion people. And sometimes when these questions come in, sometimes our minds can narrow into a particular country and a sector with opportunities. So sometimes they become bogus if you're not very careful and too broad. So it has to be narrowed down. So we've seen a lot of opportunity in certain sector. Like feed tech has gotten a lot of opportunity in the last 3 years in the country. And you can see that. And you can see some sectors like renewable energy, real estate, and all this. So there's been different sectors in the economy, and of course in the African economy, and different regions that have benefited in one sector so far. So maybe if some of these questions are very direct to these sectors, it will help. But having said that, if we go by some of the numbers you're saying and the perception, because we believe that there's also a lot of wrong perception. Definitely, there's no doubt about that. This is something we deal on a daily basis. And one of an example is when I go to the US, people think Africa is one country and everywhere is one place, and till this day, and that's how it is. And I remember when I invited people in 2010 when we hosted the World Cup, and they came to South Africa, and they were very shocked. They were shocked that why is the world complaining that you can't host it? It's unbelievable with the level of infrastructure. But of course, we don't have that level across the place. And when you go to countries like Tanzania, you see improvement, Botswana, Namibia. Yes, Zimbabwe may be struggling recently. You go to Zambia, there's a lot of work, Kenya, and all these countries. But someone will go to a country, an area that's not developed, and say Africa, and will not call that country in specific. And yes, there's struggles, but we've made a lot of strides. So just like what the CEO is saying is that there will be opportunities, there's opportunities. But for us, we say that we prefer the Africans to do it for themselves, because then now it's not going to be an exploit. So, if we make a profit as Ovid Capita, we expect that most of those profits will be reinvested in the continent. If a foreign entity comes here and makes a profit, what is that? What do you call that? They bring in a lot of money, make a lot of profit. What is that? That's another way of exploitation, and that's another way of recolonization. So we are partnering. We're saying, give us the money, we'll control the money, we'll put it where it really needs to be put. We know the industry, we know the areas, we are on the ground, we know how it's going to affect people. And like what I said before, and one of the things we're afraid of, and what the CEO was saying, I think about 2 questions ago, is that when these resources come to the same status quo, then the people in the continent are not really seeing the kind of change they want to see. It becomes too slow because the intent is to keep those people where they are. And we are saying as Ovid Capital, we want to remove people from poverty, just the way the Chinese have done.
Thank you very much, Mr. Ekos. Thank you, Mr. Anthony. Gosway.
All right, thank you, sirs. You guys spoke very beautifully. I have no inputs, no questions from my side. So I think Eric, if you have any other thing, I actually had a question before, but Ekos just talked about it beautifully. So I'm out from my side, and I'd like to thank the gentlemen for their time. Thank you so much for availing yourself for being here and share your wisdom with us once more. That was a privilege to have both of you in the same room. So, or actually the same platform, in the same room. So thank you so much. Eric, over to you.
Okay, thank you so very much, Mr. Anthony. Thank you, Mr. Ekos, for availing yourselves, giving us this time. And I believe I have learned a lot, and the millions of people who are going to watch this podcast will definitely be learning a lot. I know there's a whole lot to say. Yes, there's a whole lot to talk about, because this is Africa. And what we stand for is to see even the commonest of the Africans or liberated, live out of that poverty level. So I believe that when we call upon you next time, you will also be here to do justice to the topic that will be made available. And also, I want to remind us that this podcast is proudly powered by Ovid Capita. Ovid Capita is a private equity firm that invests in high-end growth, small and medium enterprises in Africa and other parts of the world. Thank you, gentlemen. We're privileged to have had you in this podcast. Thank you very much. From me.
The information on this podcast is for educational purposes only and is not investment or financial advice. Please do your own research before making any investment decisions. None of the information on this podcast constitutes or should be relied on as a suggestion, offer, or other solicitation to engage in or refrain from engaging in any purchase, sale, or any other investment-related activity with respect to any STO or other transaction.